Good evening, everybody. Uneducated Economist here. The Fed talks too much. There was a time, 10, 15, 20 years ago, 30 years ago, the Fed hardly said anything about their monetary policy. In fact, they were very quiet about what they were planning on doing. And now, they are out all over the place spewing all kinds of stuff. And really, they have so much Fed speak interaction with the medias and just statements that they're making that has everybody completely confused on what they're doing. Now, everybody is really pretty much under the impression that the Federal Reserve is going to continue on with their asset purchases. What is it, like $80 billion a month in treasuries and another $40 billion a month in mortgage-backed securities, if I remember right. And they have no intentions on slowing this down. And the idea behind this is that it's going to create inflation. It's going to create low interest rate environment for everybody to be able to take out loans with. This is somehow supporting households and businesses by creating a low interest rate world where they can go deeper into debt. And yet here we are seeing about how the exorbitant debts, the unsustainable debts, are growing ever increasingly more. But yet this is somehow supporting households and businesses. And I think about what it is that the Federal Reserve is going to do in order to acquire this inflation, because everything they have ever done has yet to do it. And what they are doing is more of the same. See, it's not so much about what the Federal Reserve is doing, it's whether or not you believe, or the people believe, or the investors believe, or just in general the economy believes that inflation will be coming. Because inflation is already here. We already have the money. The money has already been printed. It is in existence. Now, it hasn't hit the indicators that the Federal Reserve would like to see as far as inflation goes. But we all feel it. We all know it's there. There's not one single person out there who doesn't experience the rising prices. And for anybody to say over the last 10 years that we have seen very little inflation is, well, they're just not being very genuine with themselves. Everything has gone up, especially when it comes to the common everyday things. The things that we, as the average working class people, what we buy. Our cost of living is getting harder and harder to sustain. And it really drives me crazy when I start seeing all these stimulus packages to try and support households and businesses. Because really what that means is more debt, more of the problem. And it just drives me crazy because I've made this, relation a lot between drugs or alcohol and debt. Because it's very much the same thing. The people, the way they react to being cut off is very similar. It's very much the same thing. And you can really look at it as the same thing. People who are addicted to debt will behave in very similar fashions to those who are addicted to alcohol. They will lie to themselves, they will kid themselves, they will hide things. Debt is a very interesting little form of business that you can take on. You leverage your future. And most people do not know how to leverage their future so that it will profit for them. Most people leverage their future so that they can buy something. So they can buy some kind of consumable. So they can have some sort of fun. And that's unfortunately where most debt goes now, is into consumables. Into consuming or entertaining yourself or making yourself high of some sort. That's where most money goes. Or most debt, I should say, goes. For the average person, anyway. And really, debt should be taken out only if that debt is going to pay for itself and then profit. So if you take out debt and you buy a piece of machinery that you can use for a business, then that piece of machinery will pay for itself and then provide you with a profit, then that debt is good debt. But if you're taking out debt so that you can take a vacation, and then you come back and you have to pay for that vacation, and there's no production that comes from it, and when you're done paying for it, there is no profit from it, that's bad debt. And that's the debt that most people use. That's where most people are at. And so I think about the Federal Reserve and their supporting of households and businesses, and I don't think that's very supportive. Really, I think what is supportive is those who work hard and save to be able to get a return on their investment, to be able to get a return on their savings, to be able to have a safe, easy place to park your money where you know you can get a return. And there's just no safe place to do that. See, U.S. Treasuries have always been that place for years and years. Since the early 80s, U.S. Treasuries have always been a safe place to put your money. Not only did it pay a yield, it paid an interest rate to it, but interest rates have done nothing but go down since then, and the bonds have always gone up in price. Not always, I mean, there's fluctuations, but for the most part, over history, bonds have gone up in price, down in yield, and that's the way it's been for close to 40 years. But that's not the case anymore. And so now people are forced to put their money somewhere where they can get some sort of return, some sort of savings, but there is no savings place. So they put it into the stock market, and they buy real estate, and they, speculate in, things like Bitcoin. And they don't look at it like, to me, like, I'm not trying to give advice on what you should do. I mean, if you buy Bitcoin in one shot, that's you. I cost price average. I don't even know what my average price is for Bitcoin. I don't know how much I paid for it because I bought so much of it over time in such small pieces that I don't even know. I don't even know how much I paid for it. And to me, it doesn't matter. It's like, it doesn't matter how much you paid for it. It's a matter how much you got. When you have a limited amount of something, it doesn't matter how much you paid for it. At some point, I mean, it does. If you're looking to get a return quickly, then yes, it does matter. But if you're saving, it doesn't matter. You just put it in there and you just forget about it. You just don't worry about it. And most people who are getting into Bitcoin aren't doing that. They're freaking out and they're buying like tons of it, and they're going to get hurt. They're going to get burned from that. I can handle volatility because I've been buying it since it was $6,000 and probably even got someone that was even under that. So Bitcoin can really move, and it doesn't freak me out. It doesn't bother me. Same thing with silver. Same thing with anything. I mean, I just don't get excited about it anymore because it's not something I'm trying to make money at. It's a place that I'm trying to save in. So now I look at this environment, and here you got Treasury yields starting to rise. And a lot of people said this wasn't going to happen, that we were going to see negative interest rates, that there was no way that the interest rates on the Treasuries were going to rise. But yet this is what's happening. Go and look at the 10-year Treasury yields for the last 6 months. It's done nothing but go up. I think about that when I think about gold. See, a lot of people who used to buy treasuries always kind of shunned gold, saying that, nah, gold's just a dumb asset, sits there, doesn't do anything for you. Well, treasuries don't pay much. It's kind of a dumb asset now, because the only thing you're anticipating if you're buying treasuries is that interest rates are going to go down into the future and you'll be able to sell that thing for a profit. But you're certainly not buying it for the yield. 1% over 10 years? Does that seem realistic? No, it's a speculation. Same with gold, and same with Bitcoin, and same with anything else out there. And if you're putting money into the stock market when it's at an all-time high like it is, or real estate or anything else, then you're taking chances. Things at all-time highs have a tendency to churn. See, I look for things that are unloved, undervalued, and unappreciated. That's one of the reasons why I'm so into silver. And the longer it sits at $20, $25, somewhere in there, more likely when it starts getting down to that $20 range, I'll start buying again. And at 25 right now, I don't feel terrible about doing it. Now, honestly, I'd like to pick it up under $20 an ounce, but if that doesn't happen, 25 isn't a bad price, not in my opinion, not when you compare the ratio to gold. I mean, think about that, guys. They pull it out of the ground at a 10-to-1 ratio. Okay, right now, I don't even know what the ratio is. I mean, you got $1,800 gold and $25 silver. I mean, What is that ratio? 80 something? I don't even know. You guys tell me. Put it down there in the comment section what the ratio to gold to silver is right now. It's completely off the charts. Either gold is completely overvalued or silver is completely undervalued, one or the other. And I have a tendency to believe that silver is way undervalued, and that gold is still undervalued as well when you compare it to how much money has been printed. You don't have to love gold, but then again, you don't have to love treasuries, or you don't have to love the stock market or any of those other things. I mean, you don't have to love these things. You're just looking for a place to put your money. You know, I think about this Federal Reserve and all their speak. I'm tired of listening to them. They are doing nothing more than confusing the hell out of the markets. Oh, there's going to be inflation. Well, there's no really inflation. We're going to raise interest rates only if we see it in the future. And it's probably going to be 2 years down the road, but it may come faster than that. You just don't know. I mean, I listen to these guys and I'm thinking, you guys are nuts. Your jawboning, your words and stuff like that, you're going to lose control if you keep doing this. If you keep telling the people that there's nothing coming, that there is something coming, that you don't, they're eventually just going to give up on you and just stop listening altogether. And it hasn't happened yet because the people seem to be really fixated on everything that the Federal Reserve says and does. But what I find interesting is that the idea that the stimulus package is going to be passing soon, and that's the Federal Reserve going to be, stepping up and buying the Treasury so that this, the stimulus package can be paid for. And even though the investors out there know that the Federal Reserve will step in and buy Treasuries when the time comes, you're seeing the yields rise. The investors just don't care. They're not interested in it anymore. And this is going to be a problem. This is going to create a problem. And the Federal Reserve is going to have to look at that, and they're going to be like, man, if this 10-year just keeps going up, it's going to start creating real havoc over there in the corporate debt market. As the spread between the safe, secured Treasury starts getting closer and closer to the riskier assets of the corporations, those guys are going to have a hell of a time trying to refinance their debts. And when they start rolling that over, they're going to end up rolling it over into much higher yielding bonds. And they're not going to get nearly as much for them. And that's going to be very hard for them to deal with, especially if we're sitting in a very precarious situation in the economy. I mean, if things were rocking and rolling, nobody would even care. Nobody would even notice any of this stuff. But here it is. We're going on a year since this whole thing took place. I mean, what is it, 9 months or so since everything started in? And it's like all the stimulus, all this efforts, it's like all for naught. There is no grand recovery coming. People are excited about the stock market, but that's the only thing that's looking good. I mean, people have taken their extra money, all that stimulus money, and they're pumping it into the stock market. It's not going to last. And when this stimulus package goes, it's going to get pumped into the stock market, and you're going to see it really bubble up. And this isn't a sustainable market. This isn't where it needs to be. What needs to happen is you need to find, the true market value of that thing. And if you did right now, it would go way undervalued in order to rebound to find that market value again. The Fed is painting themselves not only into a corner, but to me, they're painting themselves out onto a cliff, out onto a branch, in my opinion, one that they're sawing on. I don't know, guys. I think about, a lot of stuff that's happening out there right now. And when I see everybody so convinced that interest rates are going to stay low or be low or go negative, and I just can't feel it. Like, I just don't see it happening. Not with the Federal Reserve. I could be wrong on this, but I honestly feel that they were going to go through every other effort that they can possibly go through besides going negative on their yields to take or I guess I shouldn't say on the yields of the Treasury, I should say on their Fed funds rate. I just feel that the Federal Reserve is probably going to try everything else first before trying that negative interest rates. And really, when it comes to like the demand for the dollar, like a lot of people are convinced that the demand for the dollar is going to diminish. That the amount of countries out there asking for dollars is going to become less and less as we go into the future. But, I come across things like the Federal Reserve stating that they are going to be working on climate change, that central banks need to have an active role in climate change. And I think to myself, what is it that you could possibly do for climate change? I mean, you guys issue loans. That's it. That's all you do. But what is it that climate change, inside of the climate change that you can possibly offer? And then I started looking into green bonds, and I realized, man, that's really where it's going to end up being. See, these green bonds, they're hitting record sales right now. And I've heard of green bonds, but I never really thought much about them. Green bonds are basically bonds that are sold with the idea that the money that comes from those bond sales is going to go to like green energy or environmental conscious projects. And it creates a great way for people to loan money into that green economy, so to speak. Whether you believe in it or not, some people do, and they want to participate in that type of investing. And so green bonds have become very popular. I'll leave links down in the description for green bonds. This is probably one that we should really keep an eye on, because really, if you look at green bonds, these things are being sold all over the world. And now the BIS has an article where they're denominated in euros, like euro-denominated green bonds that I don't know who's selling them or for what purposes that the end money is going to. But I just know that they have established this. These are like, I found like quite a few articles just in the last few days. I found some articles talking about how Hong Kong is selling record amounts. Well, I don't know if it's record amounts, but selling a bunch of these green bonds denominated in US dollars. And it just makes me wonder, it's just like, okay, so you got this big green environmental push throughout the world right now being led by these central banks pushing these green bonds. Now, whether it's the central banks pushing them or what, but, when you got the Bureau of International Settlements, kind of at the forefront of it all, yeah, I would think that the central banks are probably heavily involved in this. And now I think, well, how big could this be? Like how much of these bonds will actually be sold? I mean, is it going to be more about these green energy, these green bonds come into the future, and how, demanding, or how much demand for these things there will be as the green energy, or the green movement, build. I'm not trying to imagine like a grand future of it, just the possibilities. Okay. I'm not like trying to be in defense or in promotion or anything of this stuff. It's just that it's taking place and I want to be aware of it and what's going on. And it seems really strange to me that, there's this huge push from the central banks to push these green bonds, this green movement. And I don't know, to me, it's more about like money making, because these central banks, they don't do anything for fun. I mean, it's all about profit. It's all about money. And this will be no different. So while the moral, defense of this will be, very hard to argue, the profit from it is going to be very interesting to see where it goes. Let's put it that way. Because I feel that this green movement, that we have to do it for the betterment of the future, and everybody else is going to be a big profit money maker for these guys. And I think it probably starts with those green bonds. And I think about like the demand for the dollar and how much demand for the dollar there'll be if these green bonds are sold throughout the world in dollar denominations. See, everybody wants to do these projects. They can't seem to get anybody to buy their bonds, but if they do a green project, maybe they could get somebody to buy their bond. You see where I'm getting at here? It's a way to start funneling money into these green projects. But I know these bankers don't do anything unless they make money off of it, unless they make a profit. So that's something I want to keep an eye on, and that's what I'm going to leave the links down in the description for. Maybe that's what we should talk about, is those green bonds, and what kind of cause and effects they can have in the future, especially when the push for the green environment, or the green whatever it is that they want to call it, the new green economy, are these bonds going to be like the centerpiece of distributing the money and, funneling the money in and stuff like that. It's curious times. Okay, pretty long video. Sorry about that, guys. Uneducated Economist, you let me know.